Aloha, my name is Kalana Johnson and I am the owner of KJC Tax Preparation and Bookkeeping. Today I would like to take a moment to address a few tax tips for married couples. As many may know, there are 3 different tax statuses that can be available for married couples. The first one is married filing jointly. This is an income tax filing status that's available to any couple that has wed as of December 31st of the current tax year. It allows a couple to use only one tax return, but both spouses are equally responsible for the return and any taxes and penalties owed. The second status is married filing separately. This is a tax status used by married couples who choose to record their incomes, exemptions, and deductions on separate tax returns. Filing separately may keep a couple in a lower tax bracket and therefore keep each individual's tax liability at bay. The third option is head of household. To qualify for the head of household filing status while married, you must file your taxes separately from your spouse, pay more than half of the household expenses, not have lived with your spouse for the last 6 months of the year, and you must also have a dependent. However, for the purposes of this video, we are going to focus on the married filing jointly and married filing separately options. Now, there is a general misconception that if you are married, you are required to use the married filing jointly status for your federal income tax return. That is incorrect. However, there are numerous benefits that are exclusively available to those filing jointly when it comes to married couples. Let's look at a few of those. Number 1, you receive the largest standard deduction of $24,800 for the 2020 tax year. Number 2, you are eligible for the Earned Income Tax Credit. Number 3, you're eligible for the American Opportunity and Lifetime Learning Education Tax Credits. Number 4, you are eligible for exclusion or credit for adoption expenses. 5, you're eligible for the Child and Dependent Care Tax Credits. 6, you are eligible for the Student Loan Interest Deductions. 7, you are eligible for a $3,000 capital loss deduction limit. And then the last one is that you receive a higher IRA contribution deduction. In contrast, there are some rules or restrictions for married filing separately. The first one is if your spouse itemizes on their return, you are required to do so as well. Married filing separately, you do not have the option to choose the standard deduction if your partner is itemizing. They must be identical. So if you choose standard deduction, your spouse must also use the standard deduction. Number 2, you are not eligible for the Child and Dependent Care Expenses Credit in most instances, Earned Income Credit, Higher Education Expense Deductions, the Elderly or Disabled Credits, Student Loan Interest, Education Credits, nor the Adoption Expenses Exclusions or Credits. You may also receive a smaller child tax credit and credit for other dependents in comparison to what would be received if you had filed jointly. And then the last one is that you will likely have to include in income a greater percentage of any Social Security benefits or equivalent railroad retirement benefits that you have received. Given that list of restrictions, you may be wondering when exactly would married filing separately be a beneficial tax status. There are a few situations where this could be the case. Number 1 is if filing jointly places you and your spouse in a higher tax bracket. Number 2 is if your unreimbursed medical costs for the year are in excess of the 7.5% of your adjusted gross income limit. Number 3 is if your casualty losses in a federally declared disaster area exceed the 10% of adjusted gross income limit. Number 4 is if your miscellaneous deductions are not high enough to qualify for the 2% of AGI limit. These types of deductions include union dues, job search costs, tax prep fees, and unreimbursed business expenses, to name a few. Number 5 is for financial protection. When you file married filing separately, the IRS will not apply your refund or hold you accountable for your spouse's tax burden. And then the last one is in the case of a pending divorce or legal separation proceedings, it may be beneficial to file as married filing separately to avoid post-divorce complications with the IRS. When you choose to file married filing separately, there are states that have community property rules that you should be aware of. The states that have these rules are Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, and Wisconsin. In these states, if you file a federal tax return separately from your spouse, you must report half of all community income and all of your separate income. Community income is your income from community property, salaries, wages, and other pay received for services performed by you, your spouse, or registered domestic partner, or both during your marriage while domiciled in a community property state. And number 3, real estate that is treated as community property under the laws of the state where the property is located. Separate income is income from separate property owned by one spouse or the other. It includes money earned while domiciled in a non-community property state. Please take note that all income in most cases is considered community in Idaho, Louisiana, Texas, and Wisconsin. In relation to registered domestic partners, they are not recognized for federal tax purposes as married. They can generally file as single or head of household if applicable. However, in the states of Nevada, Washington, and California, registered domestic partners must follow community property laws. So the question is, which status is best for your family? To answer that question, it is advisable that your tax preparer prepare your taxes both as married filing jointly and married filing separately to get an accurate picture of which option is the best for your tax situation each year. I hope that this video was helpful in giving you some insight in regards to the married filing statuses for income tax purposes. I appreciate you taking the time to watch, and please feel free to share the video. If you have questions or need further assistance with your tax preparation, please feel free to reach out. Our contact information is shown below. Thank you.